Welcome to part 3 of the video series, and in this particular unit we're going to cover the median line, and we're going to do it in a way that's good for the public so that people who aren't course members yet have some idea of how it's used and how easy it is to apply. Okay? Now remember, in part 1 we looked at the overall technique where we discussed the aspect of the golden pivot rule, the 3 and 4, and the initial trend reversal and all that other good stuff. And then in the video part 2 we showed how you lower your risk to, in some cases, up under a couple of $100 per trade, per unit, using multiple time frame trading. Right? And now we're going to look at part 3, and part 3 is the median line, the pitchfork, and this is going to show you some really interesting things, and it's also going to show you when not to use the pitchfork. That's also very important. So without any further ado, let's go take a look. Okay, so if you remember yesterday, or in the previous video, in part 2, mentioned that in part 1 we had a breakaway here, which was a textbook signal to go long. The trend line people will wind up going long after prices break a trend line somewhere up here, so they'll give us support in us already being long, which is wonderful. And then what happens is after you're in the trade, this red line here is where your target line is to absolutely get out. Red, stop trading, get out of the trade. So what happens is prices will often go past the red line, and when they are past the red line, they will often reverse at a median line or another line that we'll show you in a minute. Let's show you what I mean. To draw the median line, we take 3 points: the low, the high, and then the low. We take those 3 points, and what happens is that the computer, in this case here, took the value of here to here, drew a line, and from that middle point drew a line that went from the initial point through that middle point. Real simple. Now here's what's really fun. Look at this. Once it went past the red line, which was our exit area, notice where it went up to. Boom, right there to the lower parallel. You, as a advanced course member, are looking to get out anyway past the red line when prices make new highs. So and you know that prices are likely to turn at a course line, so there you are. And it's just a wonderful place to get out and take profits, right? And using the techniques we talked about in part 1, you know that, gee, hey, this is no time to go short here. And so what happens is, once again, you draw your lines and you get an entry signal as prices break through here. Then they come back down a little bit, give another entry opportunity, and then go on their merry way. Now in this case, the red line is all the way up there. Now watch this. This is kind of cool. See, if you just draw a regular median line, you'll find that, well, prices are kind of outside of it as they're getting up to the red line, right? So what you do instead is you try something else, and this is called the modified shift median line. I'll talk more about that in a moment. And look at that. After prices go up, 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 and go past the modified shift, they go the red line and reverse. Okay, so what happens is your target is typically one of the course lines, which will be a modified shift line, and or a median line or a parallel. You just have to know where. Not a big deal. That's why we use the reaction line. And as you know, you have my way of doing reaction lines, which is very, very different from the way Andrews did it. You don't have to select from one of 10 different types or any of that nonsense. This is a lot easier. So what happens is prices go up here. Now, after prices hit here and you're out because prices went past the red line, know that they may go for quite some time, and they may go higher, they may go lower, they may do whatever, and then we still wait until we have another entry opportunity. Okay? When the course methods call for an entry, because who really wants to hang out in this gibberish here unless you're very likely to make some money and you have a nice target? Okay? Now, let's see another example of this, of something that's happening right now. Okay, these were 15-minute charts we looked at there. Let's take a look at something here. Okay, here we go. SPY. Well, in SPY, okay, here it was over and here was the breakaway, and so here we are presently, and so we're looking for prices to go past the red line. Now notice they've gone past the red line down here, but they haven't been making new highs. Okay, so if we look at this on a daily basis, we would be looking at this one here, and just for grins we can also draw in the shift median line. And the shift median line is real easy, and as we see, prices are already past that. Okay, so this is the one, this is the area we're looking at to be out of this trade, out of there, gone, yada. And in some cases what you'll find is that you draw your lines and prices are already nicely past it. Still, you still wind up getting out with the red line. Now here's what happened for me. Let's take a look. Okay. So here's the ES. I'm long an ES contract at this moment, and my entry point was right around here, and then it came back down and up and down. It's been going up nice and slowly, and so the result is I'm looking at this on a 60-minute bar chart, right? And so I'm looking for prices to go up into this area here. Will it go to this point exactly in reverse? I doubt it. Not likely. Market just isn't that perfect. But for the market to go up a little bit or a little bit past it, past the red line, which it normally does, would be very normal. And so you draw your median line mainly to give you an idea of where the market is headed. Okay, Andrew said that 80% of the time the median line is made by the market. So let's take a look at what that means. What that means is you know, you draw the line and boom, and you know, prices here have made the median line, and they're going to try to keep on going until they're after this red line, at least in most cases. Okay, let's take a look here. See, prices go past the red line and then do a nice little reversal for a while. It's much better to use the red line for your exit than waiting for prices to drop past an MLH like over here and then saying, oh no, didn't work. Not a good idea. Okay, so let's just for grin see what happens if we drew the the modified shift. And, oh, I did try to go up to the upper parallel, but couldn't quite make it. Let me just fill you in on what the modified shift is. All you really do for the modified shift is you draw a line that goes from here to here. Okay? Then you find, and then you draw a line that goes from here to here. You find the midpoint of the line, and all you do is take this line here and move it up to here so that it comes from that midpoint, and that's your modified shift. That's all it is. Real easy. So have a good time. Use the lines, and if you get a chance, take a look. If you haven't taken the course and you really can't afford our course, then that's fine. That happens, and you want more information. A lot of college students come to us, and what we then recommend are our 3 ebooks. And if you go to Power Trend Investing, one word, 3 words go into one. You go to this site here, and you can find 3 nice little ebooks at an absolute bargain. Okay, give you a good start. And if you want the real nitty-gritty, come on over to us and come take the course. All right. Thank you for your time. Bye.